Matt, we got three stocks that are up big today. Why don't you kick us off with National Bank of Greece?
All right, David. So we've seen this. I mean, this stock continues to bounce around
Every day. It's either up 20%, down 10%.
Exactly. So the bank was just absolutely slaughtered by what's going on in Greece, the continued problems in the Eurozone. You know, one thing, if you look across countries, and this is a good way for U.S. investors to think about foreign banks, is that foreign banks tend to be a proxy to a large extent on the local economy. So if you want to invest and be very tied to a local economy, invest in the banks there. And so that's for better when the economy is doing. But here we've got it a little bit for the worse. So when we think about the troubles that the U.S. banks have been in, National Bank of Greece's loan delinquencies make the U.S. banks look fantastic. So I mean, you really do have a troubled bank here. I think in terms of as we say, playing National Bank of Greece, I mean it's an option on Greece. It's an option on the recovery in Greece. That's about the best that I can say about it at this point.
Right. Well, you were looking abroad, overseas. I'm going to bring it back home right here in Washington. The stock I was watching this morning was Fannie Mae. So we've seen them continually report profits, actually. I mean, they're profitable enterprises now.
Big first quarter.
So there's people, kind of the chants are growing louder to bring this back to the public markets. I'm not sure if I'm interested. If it came back public, I don't know if this is something I would want to jump into. When we think about companies that the government had a stake in and then brought back to the public markets, they've been kind of independent companies. This has the government's hand all over it. I mean, you're basically banking on what Congress wants to do and how big of a footprint they want to have in the housing market. And when I think about a long-term investment, that just doesn't sound like something I want to be in.
Gotcha. So we're actually going to, I'll stick in Washington, D.C. actually for the final one here. Washington Real Estate Trust. This is as it says, real estate trust. It was up about 1.2% today, which isn't much, but when we consider that the market is down broadly today, it's significant. We've got an upgrade from Robert Baird, and when I look back at the balance sheet of W REIT, is 70% of the properties, roughly 70% of the properties that they have on their balance sheet are office and retail properties. So I mean, what we have here is very much a play on the recovery of the broader economy. So as people get back to work, as businesses start expanding, this will increase the demand for office space. This will increase the demand for retail space, and will also push up the rates and all that goes along with it. So I think if we're looking at Washington Real Estate Trust, it's definitely as a play on a recovering economy.
Great, thanks a lot.